What we've got coming up here is the future of finance, and a fascinating discussion is going to be led by our good friend Brandon Keys. Brandon, come on up. Brandon runs Green Candle Investments. Should I say it that way? Yes. All right, and the podcast, the YouTube channel, all the incredible stuff. You can see him out there on X. And Brandon has been a very generous media partner and helping us spread the word and interview our guests and do great work. And we're honored to always have you here on the team with us. Thanks, Brandon.
All right, thank you. All right.
With that, we will, I'm sorry.
Do you want me to?
Yeah, what?
All right, and then with that, we've got the rest of the panel coming up and joining me on stage. We've got Jason. I'm not going to try to pronounce your last name here. And then we've got John and Gabe as well. So I'll let them come up and introduce themselves. All right, welcome, fellas. To start it off, why don't we just introduce yourself and tell us a little bit about what you guys do in the space, and then we'll get it cracking.
Can you hear me? I will start. I'm Jason Leibowitz. I'm at Meanwhile, Bitcoin-denominated life insurance. I'll be giving a talk a little bit more about it later this afternoon.
This one's on. Is it on? On. My name is Jonathan Barrios. I'm with Unchained. We're a Bitcoin native financial services company, kind of the grandpas in the space. Been around since 2017, and really everything predicated on client-controlled or distributed keys. So we'll get into that as well.
Hello. Check 1, 2. On switch. Oh, there is. How you doing? I'm Gabe Higgins. I'm with Block Spaces, and we built the first Bitcoin native collateral risk management solution. So we just launched that at the Vegas conference. So I'm excited to talk more about institutional adoption.
Yeah, there we go. So I think a great place to start here is we've seen a lot of Bitcoin-backed loans, and that is seemingly the new wave of this bull market. So all of you guys kind of work in that capacity in some way, shape, or form, whether it's at an individual level or an institutional level. How do you guys see this developing over time? Because, I mean, we've had CJ from People's Reserve, and it seems like more of these products are starting to pop up. So as people that have been building in this area for a while, how have you seen it revolutionize over the past 6 months to a year? We'll start at the end with Gabe.
Oh, okay. Well, yeah, like you said, it seems to be really ramping up lately. With all the corporate treasuries coming to the front, they're going to want to be able to utilize that capital asset as such. So having the tools that can enable them to do so is going to be really important. Of course, there's other services, great services like Unchained that's been doing this for a while. Yeah, there's lots of opportunity here, and I think we're just starting to see the beginning of that.
Yeah, I would agree. I mean, I think what's been interesting the last 6 to 8 months is more people coming to it with a stronger lens of scrutiny and thinking about counterparty risk. Because take your big name of what happened last cycle, the last 2-3 years, and everyone's pretty much scarred from it. I think fortunately for Unchained, having that a tried and true since 2017 and a collaborative approach between a customer, be it a commercial entity, clients, and then a bank, be it a key agent, and kind of like the perfect Mexican standoff, right? No one person can have unilateral control of that collateral. So multi-sig is proprietary. We hope that to be more of the norm and more people being able to have, from an audit perspective, verifiability when it comes down to the client being able to guarantee that a number on a screen is not just being entrusted because we say so. It's because they themselves can check it and run the numbers. So,
Yeah, Bitcoin-backed loans are important. I've been in the space for a long time, since 2013. I've seen cycles, I've seen the greed, I've seen people borrowing at crazy rates with low LTVs, companies disappearing as a result of poor risk management. So it comes down to, having good counterparty risk, doing your due diligence on who are you lending your Bitcoin to in order to get cash, because you don't want to pay taxes when you sell your Bitcoin. I don't think anyone wants to sell their Bitcoin, so the concept of Bitcoin-backed loans is really important. And the point of it is to be tax efficient. So, there's different ways to do it. The traditional way is post Bitcoin with a counterparty. in like a 50 or 60% LTV loan, you're borrowing at about 400 basis points over SOFR. Basically, you're paying like anywhere from 9 to 13% to borrow cash. You're at risk of margin call. You have counterparty risk, liquidation risk, top-up risk. And so you really have to, it's not for the faint of heart. You really have to know what you're doing. You have to know the risks. You can't just be seeing, oh, cash against my Bitcoin without selling and not understanding the ramifications, like what happened in 2022 when there were a lot of forced liquidations and bankruptcies. So Bitcoin-backed loans are a very important concept of growing the Bitcoin economy, and it's basically, these are just basic TradFi concepts applying to DeFi, applying to crypto. But I just implore everyone to be very careful with who your counterparties are and really know what you're doing and read the fine print.
Yeah, so I think you guys all mentioned the risks and the previous blowups that we've seen. So for those of you who weren't around last cycle, we had Celsius, BlockFi, two of the bigger names that just kind of exploded on themselves. And, you know, they skyrocketed from zero evaluations to multi-billion-dollar companies very quick. You know, John, you mentioned multi-sig. What are some of the other ways that you think that somebody getting a Bitcoin-backed loan can essentially protect themselves and know what they're getting into? And we'll start with you, Jason, and kind of go down.
Well, my company, meanwhile, we are a Bitcoin-denominated life insurance, and whole life insurance is a tax-efficient vehicle that you can borrow against your policy, and you can actually borrow against your Bitcoin tax-free, and your counterparty risk is the life insurance carrier, meanwhile, and you go into the whole due diligence of the regulatory, who our regulators are and our licenses that we hold, who our investors are, and realize that it's a very AAA credit, super regulated, licenses have to be up to date, audited. It's a whole slew of factual due diligence that we've undertaken to make sure that we are one of the best counterparties. And when you have a policy, you get tax-free liquidity, 90% LTV. So that's one way to do it.
It's an interesting way to do it. I really like it. I'm a big fan of you guys as well, so awesome to be up
Thank
here
you.
with you. I mean, I think for me, I'm biased because I think being on the Unchained side, I've become so like thoughtful of that counterparty and being able to have the technology and the protocol to allow you to have this removal of moral hazard when you think about it. And so the really nice aspect is it's Bitcoin only, right? And either you have it or you don't, be it for your business. And so one of those aspects too is being able to always have real time. I mean, our book of record is over $1 billion originated and no losses. So I mean, there's a variety of ways, magic internet money going into multi-sig address, right? You know, TikTok, next block, 10 minutes. And be able to work with a team that can always be on call and make sure like we know what our clients want to do, what action they want to take. So I really think that it comes down to it, right? Kind of from the LTV approach and what that amounts to. We're at about 50% LTV and being able to create kind of a no rehypothecation approach from that. So that's just, when it comes to me, you know, I'm kind of like just the skeptic and kind of thinking about, well, this is possible. This isn't proprietary. Anybody in the space can build of it and continue with that model. So why not? That's kind of how I look at it.
Yeah, exactly. And taking inspiration, actually, our product was very much inspired by all those collapses. And it really just solidified to me that we're still, first of all, very early, and there's still a lot of infrastructure that needs to be honed in on and built. And really focusing on the multi-sig approach is the right approach. And I think it's a matter of time before that's standard. And we should all demand that, actually, from the lending platforms that we are looking to use. That should be just an industry standard thing to help prevent and mitigate against those losses, against those kinds of risks. That's what this space has needed since Mt. Gox. So having solutions that just make that innately part of the whole entire program is warranted and should be demanded from customers. Because as Unchained has proven, it works extremely well. So I think going forward, all institutions that utilize digital assets, and what the key here is, these assets are natively programmable. So you can program these things on a protocol level to have this kind of security risk mitigated instrument to facilitate the same kinds of financial products, but in a much less risky way. So I think eventually, once this becomes known throughout the industry and this becomes industry standard, I think there'll be a premium on these kinds of instruments because they're so secure. And of course, Bitcoin is the most pristine collateral asset as well. So there's going to be a lot of vying over who is operating in that regard. So that's what inspired our product as well.
Yeah, so it seems like, as you guys are all pointing out here, Michael Saylor said it, Bitcoin's the most pristine collateral, but another movement that we're seeing right now is Bitcoin on the balance sheet for corporations. As you guys are running Bitcoin businesses or involved with Bitcoin businesses, how do you see this, playing a role going forward as well? Because, before it was the cash reserves, and now it almost seems like, a nuance to not have cash on the balance sheet, to have that Bitcoin back. So how do you guys see this revolutionizing as well, as we're seeing more corporations essentially issue a bunch of debt to buy more Bitcoin and get it on their balance sheet?
I think the key here is a diversification of capital. You're a company, especially if you're a publicly traded company, you have stock, you have shareholders, people that own your company all over the world, and you have these assets that are generally in fiat. And you realize, after Michael Saylor has been saying it for years, that fiat is inflating, that it's devaluing. And what can you do to protect your capital? Well, one of the diversification tools is obviously Bitcoin. And so then it comes into, all right, how much Bitcoin, how do you buy Bitcoin? Where do you custody Bitcoin? How much Bitcoin should you store in your capital reserves? What percentage of your assets should be in Bitcoin? The micro strategy or the strategy approach is you do this to increase the stock price of your publicly traded company. That's the playbook that he has been harping on for years now. He's devised it and customized it for pensions, for endowments, for charities, for governments, and obviously for other publicly traded companies. This is how you do this in order to increase the value, appreciate the value of your company's equity or valuation, to protect it into the future. And so it begs the question of, all right, if you're going to buy and hold Bitcoin, where are you going to store it? Who are your custodians? Because the true thing here is that none of these companies are self-custodying. They kind of can't. Mike Saylor used to say, believe in self-custody. I think the invention of Bitcoin is the ability to self-custody a digital asset for pretty much the first time ever. But when you get to this, audited SOC 2 type of entities that are regulated up the wazoo, they can't self-custody for a whole host of reasons, key man risks, et cetera. So they have to choose custodians, and they generally chose in the crypto space, the AAA credits, so like the Coinbases and Anchorages. But the important thing here is diversification of your assets away from these inflating fiat currencies.
I think also to add to that is, to your point earlier, people wanting to get in, add it to their treasury, but they also are coming to a realization that although they start at one point, through their evolution and kind of moving through that gradient scale of maybe self-custody becomes more of a possibility, be it that they have the internal controls now, they've done the audits, they've found the counterparts that they feel comfortable with, and for them to realize that they're not just locked into the golden handcuffs and can never leave, right? We can do this within an hour and move, X amount of Bitcoin, whether it's, super small or super high by whatever standard, and it's not to where you can never go into this more, controlled approach rather.
And the thing is that some of these companies, not MicroStrategy, who pledges to never sell their Bitcoin or use their Bitcoin, some of these companies are going to put 5% or 10% of their capital into Bitcoin, and it's going to go to $1 million one day. I mean, I think everyone in this room could probably agree that at some point in our lifetime, Bitcoin is going to go much, much higher just due to the increase in adoption. And some of these companies are not going to be as orange-pilled as Michael Saylor, but they own Bitcoin, and they're going to want to monetize it. They're going to want to use it. Now, the question is, are they going to sell it for a big capital gain, or are they going to create these Bitcoin-backed loans? Are they going to borrow capital against their Bitcoin? Now, in the future, there'll probably be a lot more tools and different outlets and companies that they can use pretty much in the banking system, like the Morgan Stanleys of the world, where they will likely, in my opinion, be able to get cash against their Bitcoin custodied at Morgan Stanley or wherever else it'll be custodied in the future. But you're going to start to see the need for spending money against these appreciated assets without selling them to, because you don't want to pay the taxable gain.
Yeah, I couldn't say that better. And those tools are needed and necessary, and that's what we decided to kind of dive down the rabbit hole there with Blockspace's product that we just launched. So those tools are coming to the fore and are needed, and enabling the self-custody of the institution in a safe way too is sorely needed. Or whether they do it through a qualified custodian or not, I think we'll start to see a bifurcation once these tools come to the fore and make it easier for them to do it themselves instead of pushing it off into another third party. And it's just risky to have Coinbase, for instance, owning 90% of all the ETFs, right? So that's a risk in and of itself. So diversifying that through a bunch of other custody agents would be helpful for everybody to, again, mitigate risk. That's what the key is.
Yeah, I mean, I think that's my biggest fear right there, what you just lined out, Gabe, is that 90% of the ETFs custodied by Coinbase, majority of these big players are custodied by Coinbase. And so there's, if you look around, there's companies that are raising $1 billion to buy Bitcoin, and the available supply is only like 3,000 coins a week. So, the Bitcoin that's on exchanges right now is just about 2 million. And with only 3,000 a week from 4 sellers as miners, it seems like all of these corporations are just borrowing so much money and scooping up all this Bitcoin so quickly. So it seems like the FOMO effect of all of these corporations doing the strategy playbook is just getting started. And it's starting to accelerate really quickly. Is that what you guys are noticing, like talking to other potential business partners? I know we've got individuals starting to try to do that and find ways as that, but are you noticing just a huge shift in that area as well?
Yeah, we're definitely noticing that, but not just with pubcos, but also just financial institutions looking to see how they can get into the space. Like, they see the growth, they see the adoption, they see it's not going to go anywhere. They see the regulatory environment clearing a clear path for them to move forward, unlike the last 4 years. And whether or not that sustains, who knows, right? So the vibe is constantly shifting, but we have clarity now. So now everybody is kind of rushing to the door here, so to speak. So we're seeing tons of activity in that sector.
I would second that. I would say that what's interesting is when you have a lot of like fiscally conservative individuals within organizations or family offices, the older guard kind of coming to the table saying, yeah, we got to start moving now. And then them leaning on to the thought leaders within the organization saying, okay, like what are the next steps that we should be taking and how? But there's that big willingness to do so, which is like very palpable, I'd say, the last 6 months. So there is that rush to the door, as he puts it.
Yeah, I've noticed a trend over time, increase in adoption. Obviously, there's fundamental tailwinds behind the regulators getting in favor of crypto since the election last year, and that's opening the door. The OCC said banks can now touch crypto. There's obviously a lot of static friction to setting up a custody wallet and an exchange or OTC liquidity account to buy Bitcoin. I mean, it's all this new stuff. And the ETFs really helped make it a lot easier to just buy it in your brokerage account, Robinhood, wherever. I think the next wave of adoption is really going to come from the banks saying, like Coinbase, you can buy spot Bitcoin or ETH with us. And you already have a bank account with whatever bank you're banking with, and you can just start doing it that way, as opposed to having to open up 2 accounts, liquidity and custody, and then thinking about private key and password management. And then what happens if you pass away? How do you make sure your loved ones get your private? It's a whole, rabbit hole of how to secure your digital assets, and it's not easy. and no one's really made it that easy. And so the adoption's increasing, but I think the next major hurdle that we'll be jumping over is when the banks, and I just pick on Morgan Stanley because I feel like they're getting close, but like those types of banks say, buy Bitcoin with us, we'll custody it for you. They'll obviously charge you a fee, but you don't care because you pay fees, and it's kind of this thing that people are used to paying all these fees to banks, which kind of sucks, but it's just the way of the fiat banking world, and at least they'll provide some liquidity for you.
I would push back on that a little bit. Aside from for us being a counterpart in almost $11 billion worth of Bitcoin and having made it easy for inheritance, for how you want to title it to trust, business individuals, commercial loans, IRAs, there's many providers on the multi-sig side that have helped on the inheritance side and how this can work. And whether you can move on the scale of wanting to distribute keys amongst other key agents, whether that's institutions or other counterparts, be it law firms or family members, or you want to graduate and move up and down kind of a flexible key quorum. And that's not just our idea, that's many providers out there as well on the multi-sig side. So I think there is an ease and realizing how much you want to be hands-on or hands-off, but removing, again, that moral hazard, I think it very much does exist. So I think that's becoming more of a norm.
No, you guys have done a great job. I think the point I'm trying to make is that you have to open up a new account, new KYC, new onboarding, new login. I mean, everyone has a million logins and passwords these days, and to get the 55-year-old or 65-year-old to get another account to buy Bitcoin as opposed to making it easy and just buying it at Morgan Stanley. I'm not saying that's the ultimate, like that's what needs to happen. I'm just saying it will happen. The banks will open the door, and that will usher in a whole new wave of buying against the 3,000 new supply each week. And so you're just going to see prices go higher and higher and higher over time, in my opinion.
Yeah, and I think also if you look at it, wherever it's being held, you can just look at historically throughout the entire network how long Bitcoin has lived on certain addresses, so like the time in which it stayed static. I think also to kind of show like the self-custody has continued to grow and how much that supply is in self-custody relative to large custodians. I think the reason, to kind of highlight why it is normal is I hope there not to be a continued hesitancy of like, we can't do this, so we must off-put again. In this digital asset, right? I think that for people to realize that like there's been a lot of education, we stand on the shoulders of giants and a lot of products that have been built to make it so easy that I've seen myself, grandmothers and very large scale, enterprises do it themselves either internally or wanting to move up and down a scale when it comes to key management and figuring out these controls, right? Because it is trying to figure out like how do we stop within our own organization if someone was to get hit by a bus or if somebody were to run off. So I think that's the nice thing is I think we're getting to a point where you can have this become more of the norm in self-custody. But again, I'm a little biased.
Yeah, bias isn't an issue, right? We want to hear it from your perspective. But, while you guys were talking, I was just thinking of how many different industries Bitcoin is essentially taking over, right? I mean, I mentioned it a couple times, but CJ, with People's Reserve, the real estate industry, that's over a $300 trillion market that Bitcoin is now going to start to revolutionize. Wells Fargo actually came out and said the biggest untold story so far of 2025 is that MSTR and all of their products is dipping into that $300 trillion bond market as well. So, these industries that Bitcoin is starting to dip its toe into seems to be, kind of taking over pretty quickly, and it's, just a $2 trillion asset. So basically long-winded way to ask, how do you guys see this dipping into the real estate and the bond market as we're going forward? Because we talked a lot about loans, but, these are two other major industries as well.
I would say, at least from the real estate side, I've seen a lot more like family office or commercial real estate groups thinking about how to take their cash flow and just turn it into passive, like Bitcoin treasury, right? And that's nothing new in rocket science, but that what I've seen more of it. And then also kind of a lot of seeing people from that same industry kind of viewing it as like more tangible, right? It's not ethereal in their mind, saying, okay, there is value here. So again, maybe to the knowledge curve.
Yeah, one of the things we're working on, meanwhile, being a life insurance company, is we have to invest our balance sheet and we have to earn Bitcoin-denominated yield. And one of the projects we're working on is as new entrants come into the Bitcoin space for liquidity, to make markets. Again, I'm just going to use the Morgan Stanley example. They want to come in, they want to start making markets, two-way markets and spot Bitcoin, eventually derivatives and lending, et cetera. They need a lot of Bitcoin on balance sheet in order to have inventory and to have liquidity. So they have two options. They can either go and spend a lot of money and buy Bitcoin, or they can borrow Bitcoin. And one of the unique things for an investment grade credit like a Morgan Stanley would be to issue a Bitcoin denominated bond. Call it a 5-year bond at a $100 million issuance, where anyone who wants this bond, you have to pay in Bitcoin, not fiat, because Morgan Stanley wants Bitcoin. And the reason you'll do this is because Morgan Stanley will pay a yield in Bitcoin. So we think somewhere between 3 and 4%, 3 and 5% is probably in the ballpark of what's realistic. And you're going to, I think you're going to see, and we're working on it, in the next couple of years, new entrants come into the space, issue 5-year notes, Bitcoin-denominated bonds, paying Bitcoin-denominated yield, building out a debt capital market yield curve in Bitcoin. The bond market is going to start getting Bitcoinized, if that's a word that I just invented or not.
Yeah. Hyper-Bitcoinization is, I think we're starting to see that happen. That's what this is, right? You've heard of the dollar milkshake theory. Bitcoin is starting to eat that. So we're going to have a Bitcoin milkshake theory where Bitcoin is going to just start sucking all the liquidity from all the capital markets, and it's slowly but surely, and then quickly, as fiats start to tumble and fail or fall under the weight of their own debt, right? So Bitcoin is the escape valve that everybody is going to be looking for. And whether or not they all rush at once or not is going to depend on, you know, how everything else plays out. But the key is to whoever gets in first is going to benefit the most, right? And it's still not too late, right? We're still very, very early. And I thought I was late in 2012 when I discovered Bitcoin. And the key I tell everybody is that what we failed to understand then, and people fail to understand now, is how big of a problem Bitcoin has solved. It's everything. It's every point of value that mankind has ever touched. So we're just dipping our toes into what's possible with this asset, and so that's why I'm super bullish and excited, and it's exhilarating to see all this activity starting to happen with Bitcoin. It's starting to eat all the value of the world, and rightfully so. It's the best money that mankind has ever had, literally. So that's what we're pushing for here is how do we get Bitcoin into all of these different sectors and industries, and sucking liquidity from all these areas of the capital markets.
Yeah, I'll follow on that. I think the concept that Bitcoin is the soundest hard money that's ever been invented is really important. And ultimately, though, everything is a belief system. The dollar, piece of paper, belief system, U.S. government, military is going to back the value of it. Gold, belief system. I mean, it's just a rock. It doesn't do anything. I think as kids grow up with iPads from the age of 1, everything is digital, and when they grow into, adulthood in the next 20 years or so, they're going to look at gold as a heavy metal rock and ask, why does this thing have so much value, and shift, in my opinion, towards a digital world, a digital version of gold, which is Bitcoin. I think that, but ultimately, what is Bitcoin? You can't touch it, you can't feel it, you can't see it. It's a belief system, but it is immutable. You can't tamper with it. It is factual truth. It is a ledger of everything. It's transparent. It solves a lot of the problems, like a lot of the bugs of gold are features in Bitcoin. The transportability and infinite divisibility. These are things that make Bitcoin, the invention, so sound and such a good hard money. But ultimately, it's a belief system, and the human mind has to shift into that belief system, and we're starting to see it, and you're starting to see these legends in Wall Street, Ray Dalios and whoever else, that are full believers in Bitcoin now, and you're going to see more and more and more people shift their mind to realize that, yeah, we're going to believe something, they may as well believe Bitcoin and start using it and working with it and spending it, and that's what I think is also going to lead to adoption.
I would say lastly, I'm sure many of you traveled, in and out of the state for today. A really cool thought experiment is when you're ever taking off in your, on your flight, look out the window, everything priced in that. and everyone's following the same rule set. We all are going to be subject to the 4-year monetary rule set. We're all going to have to abide by the same rules. And just thinking about, early question, what happens in real estate and stuff like that. I mean, you can tangibly think and see what is and what is the future on that.
Yeah, 100%. And I think River actually released a study that showed that more Americans now own Bitcoin than gold today. So I definitely see that as a shift coming through. But we've been bouncing around and talking about loans, kind of utilizing Bitcoin as that pristine collateral. Jack Dorsey came and said if it's not peer-to-peer cash, then Bitcoin has failed. So how do you guys see this developing? Is it always just going to be that store of value as gold, or do you see us getting to that peer-to-peer cash eventually?
I have to disagree with that concept, and I've heard it from so many people for so many years that I wanted cash. Let's create BCH or BSV or all these non-Bitcoin forks. There's 17 million different cryptocurrencies out there. They're all competing with a handful of ones that are useful, and really just Bitcoin is the one that is the most useful and decentralized and adopted and has the most upside. It doesn't have to be cash. And it can be cash because you are seeing the advent of Lightning Network and side chains built on Bitcoin. Bitcoin is the granite foundation layer, and other cash and other apps and smart contracts can be built on top of it. But ultimately, what you're leveraging is the immutable, decentralized foundation that is Bitcoin. So while Jack might say that Bitcoin itself is not cash because it takes 10 minutes and there are apps that are actively being built that take milliseconds and you can use Bitcoin as cash, or that net settle down ultimately into Bitcoin. But
I'm just curious. I feel like sometimes, I know that we all the end state where we want to go, where we want to be. I just think that we have to take a step back and remember these things take time, right? So I think a lot of these projects, being in Austin and seeing some of the gigabrains and some of the people I'm fortunate to interact with on a day to day on the variety of different events, even small ones no one's heard about, L2s and what they're trying to think through and the different niche problems, but they're flushing it out. I don't think we should say today that it's not possible or we already lost or anything like that. It's trust the process. That's kind of how I look at it.
Yeah, I couldn't agree more with Jason and John. We're still very early in this whole endeavor, right? And we're for the first time in probably 5 millennia seeing a brand new asset class rise up from nothing and kind of insert itself into all areas of where value transfer takes place in a digital world. So yeah, this is going to take time. So everybody needs to just calm down. Bitcoin's 16 years old, for goodness sake. The fact that we're even talking about a Bitcoin strategic reserve for the United States was a pipe dream 10 years ago, that we didn't think would happen for another 100 years, probably. The fact that we've gotten so far so quickly is what has really kind of taken me back. And by the way, Lightning works. I just used it to purchase one of the art pieces out there. So you can definitely use it as a peer-to-peer payment for payments, regular payments. How many of you have gone to Steak and Shake? There you go. So you can use it in the real world for real world things and purchase food at a fast food shop. It's amazing. And it's what we've always, been talking about, and it's happening. So, the fact that that's not the primary use case doesn't concern me, because it eventually will be, all use cases will be based on Bitcoin in some way, shape, or form.
Yeah, and it seems like that's going to be developing over time, as you guys are saying. Right now, maybe in the United States, it's more of a store of value. Some cases, you use it as peer-to-peer cash. I think we had a panel up here earlier that said about 10% of full Bitcoin business is receiving payments in Bitcoin. So I think people are still kind of tentative to get there. But I feel like with these products coming out, the loan-based products, people are never going to sell their Bitcoin at this point. So, what do you think has to change to, I guess, incentivize that, or to get to a place where we are using it instead of just using it as that collateral?
I think you'll spend it when you need to. It's an asset, right? Every asset has its price that you have to weigh whether or not what you're purchasing outweighs what you're giving up, right? So it's always a trade-off, and everybody has a different trade-off for everything in life. So it's going to vary for every use case and every purchase. So that doesn't really bother me either.
There's a price for everything. Everyone has a price.
Yeah, seeing some OG Bitcoiners talk about how they sold Bitcoin, I'm like, never in a million years gun to my head would I thought you'd have sold some Bitcoin, but it happens, right? I mean, there comes a point when you have to. So, again, I think just with time and like certain needs, you're just gonna be forced to do so. So, I don't think that's much of a scare. That'll never become fluid and moved around.
All right. Well, you guys are all working on some great stuff. Why don't you guys go into what you're working on here for the last couple minutes of this panel?
Sure. So, meanwhile, being a Bitcoin-denominated life insurance company, it's a whole life product where you pay your premiums in Bitcoin, your death benefits in Bitcoin, and you can get policy loans in Bitcoin. We are on the Bitcoin standard completely. We are a holdco, opco structure. Our holdco is where we raise money and have capital, Bitcoin and dollars, pay our employees, et cetera, expenses. Our opco, where the premiums go in, where we operate the company, does not have a bank account. It is completely denominated in Bitcoin. And we think that we're going to be one of the most valuable life insurance companies in the world. We just released our audited financials last year for 2024. They're on our website, and they are completely in Bitcoin, meaning a bunch of numbers with B's in front of them instead of dollar signs. So I think that's the direction of Bitcoin standard companies, and it's pretty cool, and I'm excited about it.
Me for Unchained, it's just really just a one-stop shop. Bitcoin is a singular focus, and being able to provide a variety of different needs, for trusts, businesses, families. If you want to be an Uncle Jim, right? I'm sure many of you here are kind of like the orange cloak evangelists in your family. Maybe you want to help and start in creating kind of like a solid foundation point in that key control. And from there, all the services that can be provided in that approach, right? And again, it's, as I keep saying, the removal of moral hazard, whether it's trading desk, commercial loans, IRAs, even down to DAFs as well, and really just thinking through what does that look like in the future? As I'm sure some have read, kind of Drew Bonsel's thought process on the network of keys, and be able to start from that start point, and then think through how do we provide our services or a service to a client. That way, we ourselves can't be tempted any which way to touch that from this long-term approach. So, been building kind of a couple things behind the curtain. We've made some releases as of recent, and more to come later this summer and end of the year as well.
Yeah, at Block Spaces, we just announced our Bitcoin native collateral management platform called ARC. Stands for Auto Reconcile Collateral Contracts. It's really a way for institutions to be able to start launching Bitcoin products. So we built a platform for them to just kind of plug and play if they want to do Bitcoin lending, if they want to do other Bitcoin-based derivatives. We're going to get into those, such as forward contracts for Bitcoin and for block space itself. We believe that's going to be commoditized by miners as the secondary. There's value with the Bitcoin asset, but also the network and how it transacts. So that will be bought and sold and traded just like any commodity marketplace. So we've built the framework that's Bitcoin native. So you use Bitcoin as the asset and as the settlement rail as well by building a programmable Lightning Network node. That's what we've been working on, and we're excited to. It's not really retail focused; it's more institutional to institution, back office stuff. But that's kind of infrastructure that we focus on, so Bitcoin can start, infiltrating the capital markets in these kinds of ways.
Make sure that they're going to be around, so make sure that you guys come up and ask some questions. I know everybody's waiting for lunch, but so thank you guys for your attention, and give these guys a round of applause.